Yeah, when we do a thorough check of the internal control, then we will understand whether we can trust the financial figures, what is shown in the balance sheet and P&L. Clear? If there is no
Mhm.
proper authorization, how can I trust the figures? Right. So, as an auditor, to trust documents, we should have a basic conformity that the internal control system is working properly. Then, auditing standard or auditing standard or auditing code 315, understanding the entity and its environment and assessing the risk of material misstatement provides the basis for considerations of this topic. Yeah, then emphasis also is placed on technology in the standards. Accordingly, the study unit contains definition and concept of great significance for exam. This chapter is important for the examinations. Then next thing, why internal control? The auditors are more into internal control check because there is statutory requirement for auditors to check the internal control. That's I hope you remember in BEC we studied about Sarbanes-Oxley Act, right?
Yeah.
In
Yeah.
Sarbanes-Oxley Act, we said, what was that? Okay, according to Sarbanes-Oxley Act, the auditor should, Sarbanes-Oxley Act actually pressures PCAOB, right? Public Companies Auditors Oversight Board. Uh, Sarbanes-Oxley pressures PCAOB to advise or ask auditors to check the internal control system. Clear? And
Yeah.
Securities Exchange also have asked the PCAOB to check the internal control system. And here in PCAOB's auditing standard 2110, identifying and assessing risk of material misstatement requires consideration of internal control in a financial statement audit. Moreover, certain issuers, that means some companies whose market equity is more than 75 million, we call them as accelerated filers. I think when we studied about SEC filings in far or back, we studied about form number 10K and all. It was in back, right?
Yeah.
So
Some
when we,
vague memory, yes.
yeah. So when we discussed about accelerated filers, what is the date for their filing, right? In every quarter, what is that cutoff date for filing and all those that we discussed there. So for accelerated filers, uh, it is compulsory that the auditors should check the internal control. Clear?
Hmm.
Next, going in detail. Okay, introduction to internal control. Objectives of the auditor. Okay, what is our primary responsibility? Here, the objective of auditor is to identify and assess the risk of material misstatement, whether due to fraud or error at the financial statement and 11 assertions level. Okay, so
Mhm.
what was that? Okay, so basically we do our purpose is to find whether there is any material misstatement in the financial statement. Part of that, the checking of internal control is an exercise for supporting the activity of doing, like what we say, finding the risk of material misstatement. Okay. Then this objective is achieved through understanding the entity and its environment, including the entity's internal control to provide a basis for designing and implementing responses to the assessed risk of material misstatement. Now, what do we say? So once we understand the organization's business, for example, in a bank, you will have a different internal control, right? But in a
Yeah.
manufacturing unit, you will have a different internal control system. Correct. And in
Correct.
organization to organization, the internal control system which they follow is different. So we should first understand the organization, their business, their nature, the volume of the business, what kind of business they do, all those things. Clear? Then a relevant assertion has a reasonable possibility of containing a misstatement that could cause material misstatement of the financial statement. Thus, a relevant assertion has a meaningful bearing on whether the account is fairly stated. Clear?
Mhm.
Okay. That definition of internal control. Internal control is a process affected by those charged with governance. Then that means the top level managers, like board of directors, those people. Then management and other personnel designed to provide reasonable assurance regarding the achievement of objectives leading to the following. That is reliability of financial reporting, effectiveness and efficiency of operations, and compliance with applicable laws and regulations. Clear? Okay.
Yes.
Yeah.
In BZ, we already have discussed about components of internal control, that is control environment. Okay. And in control environment, first we will understand what is a control environment in an organization. Like in those cases, I think I might have given you an example of a war. If you are in a war place, then you should understand what environment it is, and we will check next the control activity. Risk assessment we will do. Okay, what is the risk we are going to have? Like how many weapons the enemy is having, how much we have. Okay, then what is the next step to control? Then we will pass the information to our next level people, and next they will provide assistance. Then we monitor the control measures, right? This is what the example I might have given. The same thing here also. Why they jumbled the order? Why? Because to make a memory aid. Okay. Crime. Control stops crime. This is a memory aid. C means control activity. R means risk assessment process. Then I means information system. M means monitoring of controls. And E means control environment. Clear?
Yeah.
Things what we studied is same here also. But this is a better way to remember. Okay. Fine. Yeah.
Yeah.
Then 11 controls. The relationship between an entity's objectives and components is direct. Moreover, internal control is relevant to the whole entity. However, an entity generally has control relating to objectives that are not relevant to an audit and need not be considered. For example, as an auditor, when you go to an organization, there is a lot of internal control measures or control measures they follow, right? But all things are not relevant for us, right?
Yeah.
Which is relevant, which controls are going to affect the financial statement, that is important for us. Clear? Example here, a computerized production scheduling system is there. It didn't have to do anything with our financial audit. Clear?
Yes.
Okay, next. Furthermore, understanding internal control relevant to each operating unit or business functions may not be needed to perform an audit. Clear?
Clear.
Okay, done. Then comes inherent limitation of internal control. Even though we have internal control in an organization, it doesn't give an absolute assurance that they are not giving that 100% assurance that there will not be any fraud. There is no assurance. That we are trying to find out a reasonable assurance that, okay, we will say, right, I have done my best, but I don't know what is the result. Clear?
Yeah.
So when you give the examination, you give your maximum effort, results are not in your hand. So that's why, like reasonable assurance. We did our part. Okay. So because of the inherent limitations of internal control, it can be designed and operated to provide only reasonable assurance that the entity's objectives are met. Clear?
Yes.
Then other limitations are human judgment is faulty. Okay. Human errors may arise. Clear? Even though there is a system in the accounting system or ERP, there is limitation, like to avoid errors, there is a lot of limitations they put, right? For example, in an Emirates ID column, we can't fill alphabets. We can put only numbers, right?
Numbers,
But what if I mistakenly put a wrong number? Okay.
Will give an error.
It is an error. It is a human error, correct? So that internal control can't stop. Okay. So,
Yeah.
for example, an error may occur in the design or of change in a change in a control. The operation of a control also may be ineffective. Example, when an individual does not understand or use an exception report. Yeah. Okay, done. Right.
Yes.
Yes.
Manual or automated controls can be circumvented by collusion. Okay. It happens. Like in an organization, there is levels of controls. Like, for example, if I'm a cashier, if I want to pay something for some expense, I need to take approval from my manager. Got it?
Hmm.
What
Yeah.
if me and the manager is together in doing this fraud? Okay, there is internal control, but it is colluded. Clear?
Yeah.
Next one, automated control. For example, it is an IT system. What if I'm a programmer? For example, I work in what we say Amazon. Whatever purchase anyone do from Amazon, what I did in a programming, I just did a small change that every transaction I will get 5 fields into my account when you make a payment. Got it?
Yeah.
No one will know. Company doesn't know, people doesn't know, I get my money. Okay. So whatever internal control is there, if I'm like this can't be done. Why? Because there is a lot of people involved. Even though I do a programming, there will be a team leader. He will check my
Yes. True.
programming code and all. Then it need to be approved and all. What if all these people are together? I said, okay, I will put my account number. We will share the money. Okay, that is where the
Yeah.
solution comes. Clear? Okay, then management may inappropriately override internal control. Sometimes there is scenarios where manager says, okay, man, even though there is rules that you should take the next manager's approval, I am saying, I am the CEO, right? You do it. Clearly. Got it.
Yeah.
Yes.
Mhm.
Management is inappropriately overriding internal control. Okay. Next comes customs, culture, and corporate governance system, and an effective control environment are not absolute deterrents of to fraud. For example, in some places, what we say, organization is giving few steps. Okay, some people, part of their culture, they think, okay, usually people used to say, right? I consider my company as my home. Am I right?
Yeah.
Yes.
And there is few things in the organization, like for example, there is a printer. Okay, I took this to my home. What man? If it is sit in office, my home doesn't make difference. Like because I consider both as my home. Okay,
Yeah.
so it is also a limitation to internal control because of the custom or a culture people have. Okay.
Yeah.
For example, if the nature of management incentives increases the risk of material misstatement, the effectiveness of control may be reduced. Now, here, management, for example, I give sales target to you people. Okay, you guys are salespersons, and I give target, and the target which I gave you is very high. So Lija told, see Nadeem, I can't achieve this target. It is too high. Then, as a CEO or marketing head, I said, okay, Lija, you do one thing. You give bribe, no problem. Okay, but
Hmm.
bring the sales. Okay. Or sometimes I put a lot of pressure. You might do some fraud in your sales. Got it?
Correct.
Yeah.
Okay. So when you give excessive pressure on the employees, they tend to do fraud, or it will increase the risk of material misstatement. Got it?
Yes.
Then there is, for example, if you talk about in branch managers, normally branch managers have profit. They are given incentives on the basis of the branch's performance, right?
Yes.
Yes.
So if I'm a branch manager and my performance is not up to the mark, what I will do, I will ask my accountant to do one thing, man, put this much sales, this much profit, and submit to head office.
Mm-hmm.
So what happened? Because of I couldn't achieve the target, okay, I did the what do we say, misstatement in the financial statement. Clear.
Yeah.
Yeah.
So I will get my incentive. Okay. Right. Next, an inherent limitation of an audit as well as internal control is need to balance benefit and cost. Okay, sometimes what happened? You might have seen in supermarkets or the groceries, right? When you go to the grocery, you purchase something, you put 2 or 3 chocolates in your pocket and come outside. No one is gonna catch you, right?
Yeah.
What if you do this when you are in Spencer, what do we say, Spinneys,
No,
or
I
in
think
Carrefour?
they will catch you.
They will catch you. So that is
Yeah.
what the cost and benefit should match. For a grocery person, even if you take 1 or 2 chocolates also, it's not going to hurt them, but it will definitely hurt them. But the problem is that they can't put these kind of machines there, automated machines.
Yes.
Clear, they can't afford it.
Yeah.
Okay, so that is one thing. Although the ability to provide only reasonable assurance is a primary design criteria for internal control, the precise measurement of cost and benefit is not feasible. Clear? That, however,
Yes.
cost should not exceed the benefit of control. Thus, the cost constraint limits the internal control. Got it?
Yes.
Okay. Then, in internal control components in detail, control activities. So, what are the control activities we implement in an organization? It can be either manual or automated. Like one of the such things are authorizations. It can be like password protected systems. Okay, when you log into your computer, there is password, so no one else can log into your computer. Clear?
Yeah.
And for the ERP systems or softwares which you are using, there will be another password. Correct?
Yes.
So even though someone log into your computer, he can't pass any judgment on your behalf. Got it? So these are all the control measures. It can be automated. Okay. Now, these are the policies and procedures helping to ensure that management's directives are followed, whether automated or manual. They have various objectives and are applied at various levels. First one, authorization should ensure that only valid transactions are initiated. Clear?
Yes.
Yeah.
So why we are having authorization? To know whether this is a valid transaction or not. Clear?
Yes.
Then performance reviews includes comparison of actual performance with budgets and prior performances. Clear? Then information processing requires checks of accuracy, completeness, and authorization of transactions. These controls include general controls and application controls. Clear? Next one, physical control. Physical control involves the physical security of assets, authorization of access, periodic counts, and reconciliations to create asset accountability. Clear?
Yeah.
Our regular stock taking, the locker system, the security guard in the organization, the punch in and punch out systems. Clear?
Yes.
Then the reconciliation, like what we say, stock reconciliation and those stuffs. Next comes the segregation of duty. Involves the separation of the function of authorization, record keeping, and asset custody. The effect should be minimized. The opportunity for a person to be able to perpetrate and conceal fraud or error in the normal course of his or her duties. Clear?
Yes.
When there is a segregation of duty, I can do fraud because, or I can't do even error. I am the one who is passing journal entries, bank entries in a computer system, in a software. Okay. And Lija is the one doing reconciliation. Okay. So if I put 10,000 for the place of 100, the 1,000, okay, who will find it? Lija will find.
Lija, yes.
What if I am the one who is passing the entry and I am the one who is doing the reconciliation?
No one will know.
No one will know, right? So that's what there is. That is the control activity. Okay,
Yes.
one of the control activities is segregation of duty. Then risk assessment process. So risk, when or we have to do a risk assessment. Okay, what when all we should do, okay, what are the risk assessment procedures we should follow? Now, Relevant risks include events and circumstances that may adversely affect an entity's ability to initiate, authorize, record, process, and report financial data consistent with the financial statement assertions. Okay.
Yeah.
Yeah. The following factors affecting the risk should be considered. That is change in operating environment. When you are doing a thing normally, or for example, regularly, you drive to your office in a car. Okay.
Mm.
Suddenly your car is breakdown, so you have to catch a bus. Okay, public transport. So now here there is a change in your normal environment, right?
Yeah.
Yes.
Yeah, you should assess your risk. We actually we as a human being we automatically does this without knowing. So if my car is on trouble, normally I leave for office 30 minutes earlier. If my car is not working, automatically I will leave my house 1 hour early.
Yes.
Right.
Yeah.
And I will be prepared. I will keep cash or change in my pocket to take tickets.
Taxi.
Right.
Yes.
Okay. If I want to, if I'm late, I need to catch a taxi. I need to keep money for that. If I'm
Yes.
going in car, I will not do all these things, right?
Yeah.
So when there is a change in operating environment, we should assess the risk. Clear?
Yes.
Okay. So a shift in the regulatory or operating environment may require reconsideration of risk. Clear? Then new personnel. New personnel may have a different focus on control issues. Clear?
Mm.
For example, you had a regular servant at home. Okay. Suddenly that servant went. She said, okay, I'm leaving. Now you brought a new servant. For the first few days, you will be having a lot of trouble.
Yes.
The salt in your curry will not be correct. Okay. The chili will not be matching. Correct. So
Correct.
new person will have a new focus or new ideology. Clear. So now you have to train them to your boundary. Clear. Your bracket. Got it?
Yes.
That new or revamped information system. For example, you are implementing a new software or you updated your software. When you update a software or when you bring in a new software, again you have to assess the risk. What are the maybe in last software you had a lot of features which could prevent fraud. In this system, you don't know what are the features there to prevent fraud. Got it? Before you found, one of your employee find it and he will start doing fraud, right?
Yeah.
Yeah.
So that is there. So automated systems are important to the risk assessment process because they provide timely information for identifying and managing risk. Moreover, significant and rapid changes in information systems themselves may affect risk. Clear?
Yes.
The rapid growth, significant and rapid expansion may strain controls and increase risk. Clear?
Yes.
You might have seen a lot of supermarkets, new supermarkets coming. Okay. They open one branch. Next month they open second branch. Second month they open third branch. So they are rapidly growing. Okay. And
Yes.
after 1 year, all these branches will be closed because they didn't do this properly. Clear?
Yes.
Okay. Now, and
What's this one new coffee shop is there, no, in Abu Dhabi? I think not in Abu Dhabi. I think they're all opening everywhere. I forgot its name. It's right
which
down in
one?
Dubai.
Philly Cafe? No.
No, no, no.
Okay. New one. Maybe because they have a lot of money.
Yeah, they a local owner actually. It's quite famous.
Yeah. That's why.
Yeah.
Okay. Arabica.
No,
Or,
no.
Yeah.
The one in the
No, I
splash,
don't
the
think
old splash, no, in Khalifa Street, down what Milestones.
milestones. Yes. 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 True.
Yeah, I don't see anyone going there, but I think in every area they
They
have
have a lot of branches and they
a
are
lot
opening a
of
new.
branches.
Yes.
Yeah.
Yes. True. True.
see, the main problem is that uh, in the order may not be knowing all these things. Okay.
Hmm.
Okay. I will tell
All
you what is the method to bring investors. You know how? If you want to do fraud, okay, I'll tell you. Go to one investor, convince him to start a business and promise him every month I will give you 10% return. Every month, not a year, every month. So the investor will think, okay, in the next 10 months, I'm going to receive all the money which I invested. Okay.
Yes.
Then I will decide whether I should continue or not. So what I will do, I will take from the other 100,000. Okay. Next month, from this 100,000, I will give the other 10,000.
Oh,
Radha will be happy. Okay.
Yeah.
Radha will tell to Lija, see, Nadeem is starting a new business. I invested 100,000. The first month he gave me 10,000. Now Radha, what will do? She will sell her car, bring again 100,000. So she is very greedy,
Yes,
right?
exactly.
Next
That's what
month
I
you
will
will
do.
get 20,000. Okay. Next month I will give you 20,000. So in 2 months you got 30,000. How much I got? 170,000. I will flew away.
Oh my God, yeah.
Okay, this is how business people work. A fraudulent business people, not the all everyone. Okay, now that's about rapid growth. Then new technology, integrating new technology into production or information process may change risk. Clear.
Yeah.
Then new business models, product or activities, inexperience with respect to new business areas or transactions may change risk. Clear. Then
Yes.
corporate restructuring, staffing and supervision changes may change the risk. Okay, this is for Lija. Clear? Lija, you understood why I said?
Yeah.
Okay. When there is restructuring happening, your supervisor change. I think you are facing the risk right now there, right? There is a lot
Actually,
of new
I
supervisors.
don't want anything. Let anything happen. Let my manager not change. That's all my prayers now. But looks that it will change.
Okay. Yeah.
Yeah.
So that is part of risk. Then expanded foreign operations. Expansion to foreign market may result in changes in risk. For example, from changes in currency exchange rates. Then new accounting pronouncement. There is a new accounting standard came. So now, as an organization, we have to adopt that accounting standard. And if there is, for example, there are some changes in the principle which may risk the finance statement preparation. Clear?
Yeah.
I think Nada might know when the IFRS 16 was relaunched in 2019, all the business people were panicked, right?
Yes, yes.
Yeah, how to implement. Auditors doesn't know. Even E&Y, Deloitte, people even doesn't know how to explain to their clients. Okay, what is IFRS 16? How to
Yeah,
implement
yeah.
those things? Yeah, so that
People panicking now about the taxes and so.
taxation.
Yeah.
So now you don't work in audit firm, right?
No. I'm working as an accountant officer.
Okay, in which company?
Royal Group.
Real group. So are you prepared for taxation for next year?
We're trying. We're
See,
always attending simulators, group meetings, and so events regarding this.
okay, so are you following IFRS in your company?
Yes.
Okay, so better you study IFRS thoroughly. Okay.
Yes, that's what I'm
Because
planning to do, guys.
okay, because once they bring taxation, how they are going to assess people? Because some people are following US GAAP, some people even doesn't have any gap. They simply
Yes.
have gap between accounting and their accounting. Real accounting and
Yeah.
their accounting is having a lot of gap. Okay, so when UAE brings taxation, they will ask everyone to follow IFRS.
Yeah.
So that everyone's financial statement looks same. Got it?
Yes,
Yeah.
yes.
Otherwise, I will follow IFRS and you will follow GAAP, US GAAP. According to your US GAAP, your profit is only 100,000 or 300,000.
Yes.
Mine
It
will
will
be
differ.
600,000.
Mm-hmm.
Okay. So when you are following same standard, then we can compare with each other and do the taxation for same for everyone.
Mm-hmm.
Okay. Now, Changes in economic conditions. Economic changes can stress an organization. Clear? Okay. Got it?
Yeah.
Then information system. An information system including the related business process relevant to financial reporting and communication consists of physical and hardware elements. That's infrastructure, and people, software, data, and manual and automated procedures. It often is used extensively. So when you say information system means everything comes inside that. Clear?
Yeah.
Hardware, software. Don't think that it's just you are talking about software. Okay. Your computer screen is an information system. It gives you information, right?
Correct.
Mhm.
What if your screen is not working? Can you see your report? No, right? So your
Yeah.
printer, even the employees, when you go for an audit, even a what do we say, peon or tea person, tea boy, right? We say office boy. From him, you collect information, right? When
Yeah.
you talk with them, some or the other clue they will give to you. Clear? Now, for financial reporting, the information system encompasses automated and manual procedures and records used in records used to initiate, authorize, uh, record, process, and report transactions, events, and conditions, and to maintain accountability for assets, liabilities, and equity. Initiation may be automated through programmed methods. Authorizing is management's approval process. Recording includes identification and capturing of relevant information. Processing involves edit and validating, calculating, measurement, valuation, summarizing, and reconciliation by manual or automated means. Reporting of financial statements or other information for use in, for example, the monitoring function may be in a print or electronic medium. Clear?
Yes.
Initiation means, for example, when you're planning to purchase something in your organization, you have to initiate that purchase, correct? Then this purchase initiation should be authorized by a manager, purchase manager, for example. Okay. Once he approves, transaction happens. Okay. You have to record
Mhm.
this transaction. So when you record this in your accounting software, do you record the shipping data, bill of lading? Not everything, right? You will record only invoices, correct?
Hmm.
So that is
Yes.
what identification and capturing of relevant information. What is relevant? You will capture. Clear?
Yeah.
If you are recording your invoice, but you are not recording your quantity, there's a problem. Clear? Quantity is also a relevant data. Clear?
Hmm.
Next, processing involves, so when you process your information means you either edit, you validate, you calculate. For example, when you're processing your financial statement, you calculate your depreciation. You do the remeasurement of the assets. Clear?
Yeah.
Then you do the reconciliation of banks or vendors and all those stuffs. Then finally, you print your report. Either you send it through email, whatever. You generate your financial statement. Clear?
Hmm.
Next one, an information system identifies and records all valid transactions, describes transactions sufficiently for proper classification, measures transactions, then determines the proper reporting period for transactions and present transactions and related disclosures properly. Clear?
Mhm.
Communication includes providing employees with an understanding of their roles and responsibilities. For example, communication may be through policy manuals, financial reporting manuals, and memoranda. It also may be electronic and oral means or by management action. Clear?
Yeah.
What if you joined your organization as Nada said, accounting supervisor? Okay.
Mhm.
And you are not given a job responsibility or roles. Okay.
Mhm.
Tomorrow your manager will come and ask you, okay, why didn't you prepare your purchase order, PO? Do you have an
Can you
answer
repeat
for
it?
that? Okay. You are not given your job's responsibilities. Okay. You are
Yes.
just given a designation. Okay.
Okay.
And one day, one of your manager comes and asks you, okay, why didn't you issue PO for this purchase order?
Mm-hmm.
You don't have an answer. Why? Because
Yes.
you don't know whether it was your duty to do or not.
Or not. Yes, exactly.
So the communication means everything comes. We give
Mm-hmm.
instruction to the employees, and it should be in written. Either it should be in written or in a policy manual or any memorandum, or it should be oral. At least your manager should have informed you that okay, you are supposed to issue POs.
Mm.
Yeah. Then monitoring of controls. Okay. Monitoring is management's timely assessment of internal control and the taking of a corrective action so that controls operate as intended and are modified for changes in conditions. Clear?
Mm.
The establishing and maintaining the internal control is management's responsibility. Okay. Yeah. For example, you as a parent, when you and your husband left your home, but your kids are at home. Okay. So for their security, what you did, you locked the door and you went.
Very dangerous.
Okay, you do every day, right?
No, no, very dangerous, I said. Especially here. Mm.
Okay. So for example, you logged and went. Okay, so what you did is you took your control measure, right?
Yeah.
Right.
No.
You did your control measure. You locked them inside the house.
Yeah.
Now you expect that they are safe.
Hmm.
You expect that they don't go outside, right? What if your lock is not properly working or they have a duplicate key? So that is not the monitoring of control. Even though you implement controls, you have to monitor whether it is working or not. Got it?
Yeah.
Lija, are you planning to check your kids' duplicate key?
No, 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 no. I will never suggest locking and going because it's riskier, even more riskier.
So the monitoring process involves the following: ongoing activities built into normal recurring actions such as supervision, possibly combined with separate evaluations, the actions of internal auditors, consideration of communication from external parties. Then, okay, monitoring information may be produced by the information system. Thus, the auditor should obtain sufficient knowledge about major monitoring activities, including the sources of related information and the basis of consideration, considering it to be reliable. Clear? So, what are the monitoring activities an organization use, methods they use? They take input from external parties. Like, for example, that's what when you get a call from Itisalat or they will do a survey, right?
Yeah.
Whether the customer care was, were you happy with the customer care or not? We are external parties for an organization, right? Whatever information we give, they consider it as monitoring of the control. Clear?
Yes.
Then actions of internal auditors, if there is any problem, internal auditors will inform. Clear? Then ongoing activities built into normal recurring actions such as supervision. From supervision, we will understand whether the control is working or not. Clear?
Clear.
Mm-hmm.
Control environment. Okay. This component is the foundation of the for all the other components. This is why when I say in BC when we studied first control environment, right? Then only we discussed about risk assessment, then what was it, control activities and those things, right?
Correct.
So first we need to understand where we are standing. That is the environment. On that basis only, we are going to assess our risk. Correct.
Hmm.
Like for example, you don't know where you are going. I blindfolded you, and I took you to Switzerland. Okay, but you are not wearing what was that sweaters because you were never aware of that environment. Correct.
Correct. Yeah.
So when you know your environment, you will do the risk assessment. Or you were on sweaters, Or I called you, okay, Elisa, come, we will go outside. And I said, okay, we are going to desert. But still, you wear a sweater because you are not aware about the environment. So once you know about your environment, you do the risk assessment automatically. Correct.
Yeah.
When you do the risk assessment, you will understand, okay, these are the risks. Then you will take the control measures. Okay, I should not wear a sweater in a desert. Correct. This is control measure. Then when you went there, it was night 12 o'clock or 1 o'clock. Now you need a sweater. So you need to monitor your control measures. Clear. Got it?
Yeah.
So you will inform your kids to bring a sweater. So that is information system is also working. Correct.
Correct. Yeah.
So this component is the foundation for the other components. It provides discipline and structure and sets the tone of the organization, including the control consciousness of its members. It includes governance and management functions, as well as the attitudes, awareness, and actions of management, and those charged with governance regarding internal control and its importance. A helpful memory, like, okay, one memory, what we see, aid is a good leader is a champion, because who designs an environment? The leader, right?
Yeah.
Mhm.
As Lija said, Lija doesn't want her manager to be changed.
Yeah.
Why? Because of your manager, you have a good environment to work.
Correct. Yeah.
A good leader is a champion. Okay. Champion means commitment to competence. C for commitment to competence, human resource policies and practices, assignment of authority and responsibility, management's philosophy and operating style, participation of those charged with governance, integrity and ethical values, organizational network. Clear? Okay. Now, competence, commitment to competence. Management must consider the competent levels of for particular jobs. Clear?
Yeah.
Yes.
How does a good leader comes up? When he recognizes talent in his team and he gives those job responsibility. Clear?
Yes.
That is, management must consider the competence level for a particular job. Okay.
Particular job.
Then human resource policies and practices. These relate to recruitment, orientation, training, evaluation, counseling, promotion, compensation, and remedial action. Training policies should communicate roles, responsibilities, and expected levels of performance and behavior. Clear?
Yeah.
So this last part is very important. Okay. This is what I'm facing in my organization. Okay. They have never mentioned what is their expected performance from me. Okay, so I always have a feeling that, okay, I'm underperforming. So I used to ask, is it okay? Am I doing good? Am I doing value addition? They'll say, okay, no, you are doing wonderful and blah, 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 blah. Okay, so it keeps the employee on a dilemma. If I don't know what is their expectation, they might give some task and they will not give me a deadline.
Correct. No
What
rules
is
of engagement.
Yeah, correct. So then I need to, so what should I think? I might think, okay, it is urgent. So I put, like what we say, urgency on that work, and I will put aside some work. Maybe the other one is more important. Okay.
Correct.
So that is one problem. Next one, assignment of authority and responsibility. This factor leads to the how authority over and responsibility for operating activities are assigned, and how reporting relationship and authorization hierarchies are established. Clear? See, when you have a good leader, he will find competent people. He will give you proper guidance.
Yeah.
He will train you. He will orient you. Clear? Next, he will assign duties to you and make you responsible.
Correct.
Got it?
Yeah.
And you will be given a hierarchy. Okay, don't disturb me every time. For example, Lija should report to Nada will report to me. So Lija will never come to me directly.
Correct. Yeah.
So I will have enough time for my work. Lija will have, Nada will have. Clear? Next, management's philosophy and operating style. They lead to management's approach to taking and managing business risk. They also lead to management's attitude and actions toward financial reporting, information processing, accounting functions, and personnel. Clear? Then participation of those charged with governance, board of directors, audit committee, etc. Their independence, experience, and stature are among the qualities that affect the entity's control consciousness. For example, what if your board of directors doesn't know about internal control, or he doesn't know about computer? This is one thing which we might see, right? Some people will think if you have a computer, you can do everything, right? So they will ask you, okay, we have provided you computer, then why the report is not ready? Okay, so there is a lot of series of process happening behind. If they are not about these things, it will be easy for us to work. Clear? So participation of those charged with governance. They should also know what is happening. Then integrity and ethical values, communications and enforcement of integrity and ethical values influence the effectiveness of the other components. Standards should be effectively communicated. Examples by management. Then management also should remove incentives and temptations for dishonest or unethical acts. Clear?
Yes.
Then audit evidence for elements of the control environment of a small business client may not be documented, especially when management communication with other employees in informal but effective. Clear? Thus, a small business may not have a written code of conduct but may communicate values orally and by example. Yeah. Then organizational network or structure. In areas of authority and responsibility and appropriate lines of reporting should be considered. We use the word network interchangeably with structure. Organizational structure is depicted by the organizational chart. Clear?
Yeah.
Then comes understanding the internal control. In all audits, the auditor should obtain an understanding of the 5 components of internal control to identify and assess the risk of material misstatement and to design further audit procedures. Clear? What are the 5 components of internal control?
Yeah.
What is that? We studied a code for that, right? Crime.
Yeah.
Okay. So crime means C means control activities. R means risk assessment. I means CRI. I means what?
I forgot. C and R I remember.
Okay. I means information system.
Information. Okay.
M means monitoring of control. Okay.
C, E is control environment.
E is control environment. Got it?
M is what? Monitoring. Okay.
Yeah, M means monitoring of control activities. Okay. Though now. Okay, next. An understanding is obtained by performing risk assessment procedures to evaluate the design of controls relevant to the audit and determine whether they have been implemented. Clear? Then implementation at a moment in time differs from operating effectiveness over a period of time. So, for example, when you start bringing some rule, for example, simply in your home, you brought a new, okay, you didn't have a shoe rack. You know, everyone knows shoe rack, right? Right. Okay. For example, in your home, you never had a shoe rack. Part of being organized, you brought a shoe rack. Okay. And you instructed your family members to keep your shoes in the shoe rack.
Yes.
Got it. Now, first a few days, you will check. Okay. Afterwards, also, you should check whether they are following or not.
Correct.
Implementation at a moment in time differs from operating effectiveness over a period of time. First a few days, everyone will be interested in keeping there. Or sometimes you buy, especially ladies, you buy organizing stuffs, right? For kitchen and for what we say wardrobe and all those things,
Yeah.
but rarely used, right? I have a lot of organizing stuff at my home, but no one uses it. Okay, now. However, the auditor is not obligated to search for deficiencies in internal control, although he must communicate any significant deficiencies and material weakness noted. So, our duty as an auditor is not to find deficiencies in internal control. It's not our duty. Our duty is to find whether there is any chances of material misstatement. While doing that work, if you see any deficiencies or material weakness, then that we should communicate. Clear?
Okay.
Now, the risk assessment should determine whether any identified risk are significant risk. Okay. Then that is requires special audit consideration. This judgment is made without regarding to related controls, but should address at least the following factors: that whether risk of fraud or significant transaction with related parties are involved. Clear? Then whether the risk relating to significant transactions outside the normal course of business or other significant recent development. Clear? Then complexity of the transaction or the subjectivity of the measurement. Got it? That is either when you do the risk assessment or significant risk, when you find identify risk, you have to check whether there's fraud or whether there's any transaction with related party. Clear? Then is there any transaction which is not arm's length transaction? Do you remember this word? Arm's length?
Yeah.
Yeah. Okay. Then any significant recent development, any changes, recent changes in the organization is there. Okay. They have to check, we have to check. Then there is any complex transaction, and we need to check whether they have properly measured that transaction. Clear? Okay. Now, the understanding should be used to identify types of potential misstatement, consider factors that affect the risk of material misstatement, design test of control if appropriate, and design substantive procedures. Clear?
Yeah.
Accounting policies. The auditor should obtain an understanding of the selection and application of accounting policies and consider whether they are appropriate. They understand, this understanding includes the following: that is significant and unusual transactions. So basically, when you go for an audit, you first need to understand what kind of accounting policy they are following or accounting standards they are following. In UAE, you have multiple businesses and different kind of businesses. Some companies following IFRS is there, some is following US GAAP. So when you go there, you have to first identify what kind of accounting policy they are having. Okay. And on that basis, you should check if there is any significant or unusual transactions. And if there is a significant or an unusual transaction happening, what is the method of accounting those things according to that particular standard? Clear?
Clear.
Okay, then, like for example, as I said, if IFRS 16, that is leases. Okay, leases is accounted in a different way in US GAAP, and leases is accounted in IFRS is in a different way. Okay, so if there is any lease contract happening in the organization, first you have to check whether they are properly recorded, whether they have followed the appropriate accounting standard. Okay, then significant policies applied when controversial or emerging areas lack guidance or consensus. Okay, consensus means whether they are matching or not. Then changes in policies, then adoption of new reporting standards, laws, and regulations. Clear?
Yeah.
Then 11 controls. 11 controls ordinarily addresses the entity's objectives relating to the preparation of fairly presented financial statements, including management of risk of material misstatement. But assessing all such control is not necessary, and the auditor should use professional judgment regarding what should be assessed. Okay. The auditor determines whether a control is relevant by considering factors such as following: the control component, the circumstances, materiality, the size of the entity, the nature of the business, including organization and ownership characteristics, the diversity and complexity of operations, the nature and complexity of control systems, including the use of service organization, legal and regulatory concerns, then the significance of the later risk. Okay. For example, when you saw a transaction, okay, you have to check whether what all control things they have done. Okay, control mechanism they have done for this particular transaction. Okay. Next, why this particular transaction happened? For example, when you did the audit, there was a payment to one guy. You doesn't know who is he. Okay. There was a payment to him. So you will check whether there is proper authorizations on it there. Okay. If there is authorizations, you will check why this payment is made to this guy. And if it is a small amount, you link it. If it is a big amount, materially big amount, then you will check how you will consider the materiality based on the entity size, right?
Yeah.
Then you will check what is the nature of the business. When you, for example, that payment was given to one of the government employee in another country. So you don't know why it is given. So when you check the nature of the business and the ownership, you will understand that this particular company is going to start a branch there in that particular country. So it can be a bribe.
Yeah. Okay.
Got it?
Yes.
Then the diversity and complexity of the operations. Okay. So these what do we say? Whether they have followed proper controls. This is how we check. Clear? Controls over the competence and accuracy of information used by the auditor are relevant if the auditor intend to use it. Okay. If you are not using that particular data, then it doesn't have any, you don't need to worry about that. Clear?
Clear.
Then identify relevant controls is facilitated by previous experience with the entity, the understanding of the entity and its environment, and information gathered during the audit. Clear?
Yeah.
Controls over operations and compliance may be relevant if they relate to information or data involved in performance of audit procedures. Examples are control related to non-financial data used in analytical procedures or non-compliance with laws and regulations having a direct effect on the determination of material amounts in the statement. Okay, that control over safeguarding of assets against unauthorized acquisition, use, or disposal may include those relating to financial reporting and operations activity objectives. But the auditor's consideration is usually limited to controls relevant to financial reporting, such as controls that limit access to the data and programs, example password that process cash payments. Okay,
Yes.
so safeguarding of assets means like, so for example, there is a lot of equipments in your organization. When you go there to audit, there is no proper logbook for movement of this particular assets. Okay, so it is an issue for your audit. There is a control deficiency there that you should report. Got it? Why? Because if there is no proper logbook, then in your balance sheet it shows 10 machines, but you can't find 10 machines there, or these machines are not numbered. Okay. In warehouse 1, you saw 3 machines. When you go to warehouse 2, there is also 3 machines, but you don't know whether it's the same machine which you saw in your warehouse 1.
Correct. Yeah.
If you don't have a barcode, then you will, how you will understand it's a different one or same one?
Yeah.
No. Design and implementation. The evaluation of design considers whether a control can effectively prevent or detect and correct material misstatement. The control has been implemented if it exists and entity is using it. An auditor may decide not to consider implementation if the design is improper. Okay. An improper design may be a material weakness in internal control that the auditor should communicate to management and those charged with the governance. Clear?
Yeah.
Okay. And that means, for example, when you check the design itself is a flaw. Okay. Then why you need to check the implementation? Got it? If design is good enough, then you will check whether it is implemented properly or not. Clear?
Yeah.
No. Risk assessment procedures. Risk assessment procedures performed to obtain evidence about the design and implementation of relevant controls include inquiries, observation of the application of specific controls, inspection of documents and reports, and tracing transactions. Clear?
Yeah.
Okay, so when you do the audit, you usually ask the staff in the organization, that is inquiry. You do questionnaires, you prepare questionnaires, you ask them questions and all those things, right? Then observation of the application of specific control, whether then you observe means you will check whether proper authorizations are there in the documents or not. Okay. Whether they are authorizing it or not. Clear?
Yeah. Okay.
Then the tracing the transactions, you check whether this particular in the balance sheet there is a new purchase showing. So you will trace back to the invoice which this particular asset is purchased. Clear?
Clear.
Then operating effectiveness. Obtaining the understanding is insufficient to test the operative effectiveness of controls unless they are automated and subject to effective control, general IT controls. Then operating effectiveness relating to how and why, by whom the control was applied and the consistency of application. Clear?
Yeah.
Understanding of IT-based systems.
Next week.
Huh? All right.
No, I said next week.
Next week. Okay, then, but there's actually two things. It's continuation, but still okay. It's fine. Okay.
Yeah.
Nada, it's okay.
That's fine.
It's fine. Okay, fine. Let's
Thank
meet next week. Okay, thank you guys. Bye. Bye.
Thank you so much. Bye.
Bye.